Right, in this particular video, I'm going to go more in depth into the accounts payable. There's a couple of other videos that you need to watch before this particular video because they go as an overview of both the accounts payable and accounts receivable. Make sure you have watched them first. It discusses the common areas relevant to both because we just want to save time for you. You don't want to be watching the same information over and over again. Let's now go ahead and perform some activities on the accounts payable so you can actually see how that is used. Right. Let's have a look at, let's just set up a new accounts payable. Let's just say that Bill's Hardware here. Okay. I'm going to set up an account for Bill's Hardware. I have purchased some materials from Bill's Hardware. Now, I'm just going to go ahead and enter some entries and I'll come back. Well, I've entered some entries here and of some materials that I've purchased from Bill's Hardware. So naturally, if I have an account at Bill's Hardware, Bill's Hardware is also keeping a record for me. So they actually have an accounts receivable over there for me, don't they? Because he's my accounts payable, it's money I owe to him, but on his side of the fence, he's keeping a separate account called accounts receivable because it's money that's owed to him from me. So you see the opposite side of the coin? So he's keeping an accounts receivable. So at the end of the month, he is going to invoice you. He's going to provide you with an invoice listing all your purchases. Why would you be doubling this up here? You're creating an accounts payable and you see that I'm going along and I'm listing all the entries as I purchase them. It's really up to you how you run your accounts payable if you use an accounts payable at all. Why would you use an accounts payable? The only reason you might use an accounts payable is if you just want to keep a complete record for yourself. So that you can, at the end of the month, check to see that the amount that they reckon that they owe you goes with the amount that you reckon you owe them. See here, I've put individual entries that are purchased that happen to be on an invoice. What happens if there was 50 or 60 different purchases on the invoice that I made from them that day? I might just put right in here the actual invoice, whatever it is, their invoice number, and off we go. So that was the invoice I received, or the purchase receipt, or the receipt number. It wouldn't be the invoice, would it? It would be the receipt number that I received when I purchased the material, or whatever it is that they provide for me. I would mark it down, and that's the total. So at the end of the month, they would provide me with a detailed invoice, and I would just check that the amounts on the invoice totaled the exact amounts that I have here. So you'd try to keep it as simple as you want. Obviously, if you wanted to record each individual item, then you record each individual item. The only reasons you would do that, and I know of one person particular who is doing this, he is saving himself thousands of dollars each month because he proved over and over again that some of his suppliers were doubling up on materials. Now, he said that some of these were large ticket items. It's not like all the little stuff. He said they weren't mucking up. It seems to be the bigger items, such as roofing materials and stuff. So he said they would invoice him 1 month, in the correct month for the roofing materials, and then the following month, they'd invoice him again for the same thing. And once upon a time, he was just paying the invoices thinking that they were correct. And then he found out 1 month that they'd actually doubled up. And so then he went back and found out that they'd done that numerous times. So he said he got a refund from them when he could prove it. So now he keeps an individual record of accounts payable. And he said that he knows each month if they've doubled up. He said he can easily track it back. He goes back to the previous month. He looks at it and goes, aha, I've already paid for that entry on this month. And bang, he can show it to them in 2 seconds flat and they can pick it up. He said he's run a lot of disputes with them this way. He said it's pretty easy for him to track it by doing this doubling up method on accounts payable. So it's relevant in some instances. If you find it useful, use it. Right, now let's get back to actually entering the entries. So I've entered the entries here. Okay, we have a due date column here on the accounts payable. What is the due date for? Let's have a look at an instance where an accounts payable is very useful. Let's suggest that you're a builder and you have 2 or 3 jobs on the go. Now, in a lot of instances, you're receiving progressive payments for money that you put into jobs. We understand that, and that's normal. So you might have received XYZ amount of money. Now, maybe that didn't cover all your materials. You want to record here when this money is due to be paid to the supplier, so that it gives you an idea of cash flow. So you might say here that this money happens to be due to be paid on the 6th of June. Maybe you've got a 60-day account or something with them. I'm just going to put that. I'm doing that for a reason. Okay? I want you to see that it now says 6th of June. That's coming up. See, it says red here. It means you're actually 47 days behind. You're over on your payment. That's because today's date happens to be the 23rd of July. Now, what would happen if that was actually, today's date was actually, if I had the entry was actually the 4th of June? I did that for a deliberate reason. Let's put blah, blah, blah in there. Let's make it $100. And let's make it that this was due on the end of July, say. Right, see this here? What's the difference? Here, today's date currently at present is the 23rd of July 2011. Now, if you have a look at this one here, I purchased this material on the 2nd of February. I had until the 6th of June to pay it. Because I haven't clicked it as being approved, or I haven't clicked it as being paid, I haven't recorded this entry, I am now 47 days over on my account. I should have paid them that money by now. You don't want to be seeing anything in red here, because obviously you're messing up your agreement with the supplier and you might lose that account with them. However, let's look at a more realistic instance here. See this here? This tells us we've got 7 days left before this money is due to be paid. I know of several individuals who have accounts with suppliers for up to 60 days. They might receive the money from their client for the item. So say they've received, say it's $1,000 for purchases you've made. So say this amount here was actually $1,000. Now, they're grabbing that $1,000 and they're putting it in on a short-term deposit, high-interest account. So they're using the client's money to earn interest. Why not? You've got it. You've received it. These guys are giving you 60 days to pay, or 30 days to pay, so you put it in a high-interest account. You're earning interest on their money, and you're paying it right at the last minute. Why not do that? So you're waiting for that to tick down to zero, and you go in and you pay it. Or you might pay it 1 or 2 days ahead, so you know you're never late. So there's an instance where this is really interesting, and it makes it quite useful. So you can put in the due date. Now, if due dates are irrelevant to you, don't use that column. You don't have to use it. But there's an example there of where that is very useful. But of course, you could probably imagine another 100 different scenarios where that would be an interesting thing to use. So there's an example there. Now, let's fast forward and let's do some entries here.